Alright, so we're back, and today we're going to talk about what is the breakup structure, why we need to use it, how to spot it, and all those other types of things. So if you've been trading and you keep getting stopped out because you're entering in the wrong direction, it's probably because you don't understand BOS, breakup structure. So today I'm going to break it down, tell y'all how to use it. Whether you're into Forex, index, or crypto, structure is structure. Once you master this concept, the charts literally starts making more sense, and I hope you start making more money with that. So before we even start about talking and telling you what a breakup structure is, let's clear on what market structure is. The market moves in three ways. Write that down. Three basic ways: uptrend, downtrend, range. Uptrend is higher highs, higher lows. Uptrend is like it keeps moving up. You could tell when you've been trading for a long time, not even long, like 1 week. You're learning the basic. You'll know what an uptrend and downtrend is. A downtrend is lower highs, lower lows. Range is sideways. You do not want to trade. You do not want to trade when it's range. Every swing high, swing low on your chart tells a story. It tells us, even each candle tells us a good story. So what is a breakup structure exactly? A breakup structure, or BOS, happens when price breaks past the previous key level. What is a key level? High or low, showing a clear shift in market direction. An uptrend, when the price breaks below the last higher low, that's a bearish breakup structure. And a downtrend, when the price breaks above the last lower high, that's a bullish breakup structure. Think of it as in, yo, like I'm done moving that way, now we're flipping. So breakup structure tells you, okay, the market might flip. It is like, it does tell you it's gonna flip, but sometimes it doesn't, because you're not supposed to be using just one building block. When trading, you need to, like I told you in the liquidity video, you need to use like your strategy. So why it matters? Because breakup structure, it tells you okay, so why breakup structure matters? Because structure breaks are how you stop guessing and start following your actual plan and start following actual price behavior. You'll see a lot of traders forcing buys in the downtrend and shorting in the uptrend because they're not using breakup structure or any other building blocks. But today we're talking about breakup structure. A breakup structure helps you confirm which side of the market to be on. Okay, if you don't know what a breakup structure is and you're in a downtrend, but you keep pressing sell like every single second, every single day or whatever, but the market is about to move up, just like here, you keep pressing sell, it comes right here, you're pressing sell. But now I know the market moved up because what? There was a breakup structure. I'm gonna show you where we know it was a breakup structure. So let's get into it. I'm gonna show you some examples and then that's gonna be it for the video. So you're in a downtrend, you're looking for the most recent high. What is the high? Move up and down, right over here. You mark at the highest point of these two candles, or the two candles you're using. If the third candle closes above or below the highest or lowest mark, that is a break of structure. Okay, so right here was a break of structure. What happened? Market moved up. Okay, let me show you another example. So okay, we are okay, this is range, by the way. It's moving sideways. You do not want to trade this. Okay, right over here. You're in an uptrend, a small uptrend. In an uptrend, you need to be looking for the lowest, most recent. You can't be using this low when you're already here. You can't. It's not gonna work. Low is a move down and then up. See, a down candle and then up. It broke, or the candle. It doesn't have to be the third candle. In the other example, it was the third candle, so I said third candle, but it doesn't have to be. So right here, the fourth or fifth, whatever candle, it went past the wick of this low we're looking for because we were in an uptrend. It broke that structure, and then look what happened. Boom, all the way down. Okay, let's show you more examples. You're in a downtrend, you're looking for the highs. Where's the most recent high? Right over here. You break the structure, you move up. One more example, and then we are done. So see, it's like a simple concept. Just learn it, use it, and then you'll be good. Okay, let's see. You're in the downtrend. You're looking for the highs. Where is the most recent high? You could have used this, but then you're all the way over here. Okay, cool. But we do have another most recent high, which was here. After this, a most recent high was this, so use this one. It broke structure. It did break structure, but what happens? It moves down because if you entered here, you're using only one building block, which we never want to do. So you want to get your trade, use all your building blocks, and then enter. I could talk about that next video, just let me know. But you do not want to use just liquidity sweep, just break a structure, just for a value gap, not one thing. You want to combine all of them together and then take a trade. I'm gonna be explaining that if you want to, and then yeah, that is what a break of structure is, how to spot it, I talked about that. What it is, we talked about that. Where to spot it, where to find it, we talked about that. So everything is done for. Put it in your notes. I want you to go find like 5 examples of break of structure. Let's do this 5 in one pair and then go find 5 in another pair. So pick 2 pairs, find 5 and 5 examples of break of structure, and you should be good. And do that every day until you can't figure it out. Sit on your fucking desk for 1 hour. If you can't figure out what a break of structure is, keep looking for it. So until next time, go do that. And it's in every fucking time frame. I'm telling you right now. I'll go to 1 minute. Let me show you before we end this video. You're in a downtrend. You're looking for the highs. Boom, what happens? Break of structure. It's a 1 minute time frame, so yeah, it looks bad. What happens? Break of structure, we're moving up. Still moving up. But yeah, use that and see you in the next video.